Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, I was going to tell you how we were all set to, snap a 4-day losing streak and end on a higher note, but all of that has gone down the dustbin. Right now, markets are wobbly as they were after the start of the day. Nifty and Sensex both have given up all of the day's gains, and we are looking like probably a 5th straight day of losses on the last street, Santo.
Yes, even I was expecting a relief rally, when we were chatting this morning, and it looks like there is no relief for this market at all from relentless selling. Investors appear to be in a mood to take money off the table at the first opportunity that they get.
Yeah, I mean, it seems like the bulls have no confidence in them at this point of time.
Yes.
They're just not so sure about it. And probably, one of the reasons is that, the Dow futures, if you look at the US stock futures, they are indicating about 150 to 200 points gap down opening for the US markets later today. So probably that had something to do with the down move that we are seeing in the past 5 to 10 minutes. That said, index heavyweights such as RIL, some of the big banks, as well as the metal stocks, they were helping the market still, limit the losses at this point of time. They were actually the main drivers who were driving the market most throughout the session, but at this point of time, they are actually playing defense and helping the market cut down its losses as much as possible. Mid cap and small cap stocks, they also had a strong start, really strong start. But that has also gone down the drain, it seems. They're largely, very much off their highs and probably around the flat line mark at this point of time. So not looking as great as I thought it was looking just like 10, 15, 20 minutes ago.
Not really surprised, CJ.
Yeah, I'm sure you have a lot to say about why this has happened, right?
Oh, did you read my mind, CJ?
Well, I'm starting to, predict your moves.
Oh,
that is what it is. You're becoming predictable, Santo.
I think I should think about that. Well, I think the big worry for the market clearly is that, relentless FPI selling, that quantum of selling becomes very difficult to
absorb after a
point, and that's what we are seeing. Of course, retail money has been flowing into the market, but the quantum of FPI selling has just been too much. Also remember that the Fed rate hikes have just begun. We got quite a few of them, and once those rate hikes start coming in,
right?
Mind you, already there is chatter about a 50 basis point hike likely at the next Fed meet.
50? I heard yesterday that some members are even okay with a 75 basis points
so
hike.
That's how drastic
alone.
Things could possibly get. Once those rate hikes start kicking in, you could see more money going out of equities, which is again certainly not a good thing for bulls.
It's not.
This apart, I think market has been in a trading range for a while now. So every time there is a rise, people think maybe there's a good time to take some money off the table. That's what you're seeing.
Possibly.
It's now suddenly become a sell on rise rally, at least as far as the large caps are concerned. In the mid cap space, you're seeing a slightly different trend. Again, retail money has been quite strong so far, but in case market remains trapped in a narrow range, you will not see the kind of enthusiasm from retail investors that you've been seeing over the last year.
Yeah, it's clearly a tug of war. At this point of time, what we are seeing is a very divided market, which right now is very unsure on which way the trend is. Right? I mean, you have the retail and domestic investors who are trying to bargain buy in the hope that we will see a major bounce back. But on the other hand, every rise is getting sold on by foreign investors. So yeah, it's a very, very volatile market in that sense.
What happened to that BTD strategy, buy the dip, which seemed to work like a charm every time?
Yeah, but at this point of time, at least buying is happening. Whether it will work like a charm or not, we will know in a few weeks or a few months. So I'll still hold your judgment on that. That said, I think, of course, the market has turned around a little bit from its highs, but the action on the specific stock counters were quite dramatic today, wasn't it?
Yes, very volatile today. Good firm start, and towards the end of the day, I think in the last half an hour, most stocks have given up their gains, but some strong performers still. NMDC has been one of them. The stock has also done fairly well for this year so far, close to about a 30%
Pretty good,
gain.
pretty good.
And what's driving the stock right now? It's largely buoyant global iron ore prices, and besides this, the domestic demand has also been pretty strong. Two factors which has really helped the stock outperform. In addition, there is also the demerger of NMDC steel business, which is coming up, and NMDC will be supplying iron ore to that. So, these are the triggers that market is talking about, and that's been keeping the stock in the limelight. We have Mindtree, which is taken a knock after just about okay set of numbers.
Okay set, numbers were broadly fine. It's just that the market right
is what
now
price
is
you want to
mood.
pay for that. So, numbers were decent. The management has said that it's confident of maintaining its growth momentum, but remember CJ, there's suddenly this chatter about a likely merger of Mindtree with L&T Infotech. So, that is now what the market is focused on right now.
Although both companies have denied the reports as speculative.
It's speculative, but if you watch the Mindtree interview today on CNBC TV 18, if you I won't say read between the line. I mean, if you try to interpret it, they're not outrightly denying it. So something seems to be afoot there.
And I think this was something that was also a talk when the actual takeover happened by L&T, the hostile takeover that happened by L&T a few years ago. A lot of analysts expected this to be the eventual course of action, that the IT companies within the L&T's umbrella be more
so
together.
That will be the focus. I think the swap ratio, speculation over a likely swap ratio, that is what will be driving sentiment for this stock.
Yeah, but my point here would be that if you look at the numbers in isolation, they are not really bad. They're actually pretty good, right? And if you concentrate on the commentary as well, it's pretty good. The problem with Mindtree is that it's not that growth is an issue, like a lot of people were saying about Infosys, maybe that the growth could taper off going forward. Growth is actually not an issue. A lot of analysts expect it to be, give industry-leading growth in FY23. The problem is valuation. A lot has been priced in terms of, positives in the stock, and now at almost 38 times future earnings, 1 year forward earnings. Investors are not really sure how much upside
ultimately
is left.
It all boils down to valuation.
So I would not be surprised if there is a little bit of bargain buying once there is a bit of a correction in the stock. Some of the value hunters in the market might probably look at this
the new generation value hunters will just see how much the stock has fallen from the high and then decide that it's a bargain.
Of course,
that kind
they're
of
so confident on the growth.
M&M Financial this is a stock which had been underperforming the NBFC pack for a while now, but over the last few sessions it's back in favor with the buyers. Now, according to brokers, the reason for the renewed interest is forecast of a normal monsoon, which is typically good for the farm sector, and M&M Financial is one of the major tractor financiers, so it should benefit from a good monsoon. So that's one of the reasons you're seeing interest in the stock. Besides, Morgan Stanley had recently come out with a buy recommendation on the stock, and also with a price target of 227 rupees. So these are the couple of things that's kept interest alive in this counter. Cholamandalam Investment, again from the NBFC pack, sustained performance over the last 1 month, good interest there. What market is really kicked up about the stock is its execution track record and also the quality of its book. Besides both the segments that it's operating in, which is that housing finance and vehicles, it's been doing pretty decent out there. The only thing is, again, what kind of valuations are you willing to pay? So the stock has become expensive. So what market now is speculating is that there could be something more than just pure fundamentals. Remember, HDFC has been merged into HDFC Bank. So, many NBFCs need to question whether, it makes sense, staying as a standalone NBFC.
So consolidation is emerging as a big theme within
so
the
that is one of the
sector.
factors which is driving interest in Cholamandalam Investment. And lastly, ICICI Pru Life, this stock came out with its earnings a couple of days back. Again, fairly decent set of numbers, which has led many investors to many brokers to turn positive on that. Morgan Stanley, CLSA, among the broking firms which have turned positive on have positive ratings on the stock. The price target for the stock is upwards of 650. The value of new business that showed pretty strong growth, and that's what analysts have been flagging, saying that despite all the spread of the Omicron variant, it has done fairly well. So this is what is working in favor of the stock, but right now there is selling pressure. Today it's been among the big losers of the day.
And I think the reason being that a lot of the data points that are coming across from ICICI Prudential Life Insurance perspective is not really encouraging. If you look at the March data that has come out for the insurance sector, it lagged behind peers both in terms of premium growth and APE growth. So that is one point. Secondly, earlier today on CNBC TV 18, Adrian Lim of Aberdeen Asset Management He was talking about, ICICI Prudential because in a recent newsletter, Aberdeen announced that they have fully exited ICICI Prudential. So that came, I mean, that is a very telling sign that a very long-term investor, long-only fund like Aberdeen, were getting out of ICICI Prudential, probably because they are concerned about growth and maybe there is a better growth opportunity out there in the life insurance business.
That's possible, but there can be many reasons to sell, but only one reason to buy. So if you're looking at any big ticket,
there can be many reasons to buy, only one reason to sell is what I would say.
You wouldn't put money unless you're sure of making decent return, but you could be selling for any reason. But if you're looking for that, indication or hint from any big, deep-pocketed investor, it should be more when he's buying rather than when he's selling. Well, that was on my plate.
Market, yeah, I think we need a quick status check on the market. Yeah,
yes,
it's not looking very good, Santo.
The selling pressure seems to have intensified over the last 15 minutes, and we're seeing across the board selling here now. SBI Life is among the big losers of the day. Infosys is now down close to about 4%. That stock has taken quite a bit of beating. And
absolutely,
in fact,
I think it's the laggards which were also there in yesterday's trade. It's HDFC, HDFC Bank, and Infosys, which are basically dragging the market again towards the low point of the day. Nifty Bank Index has come off 700 points from day's high, which is not really looking good because earlier in the day, remember, it was actually the Nifty Bank Index and some of the index heavyweights such as RIL who were driving the market higher. But like at this point of time, even Nifty Bank has no hope.
Yes,
it seems like that.
This is more to do with weak global cues. Nifty Bank down by about close to about 300 points.
We are at the mercy of Uncle Sam at this point of time.
Exactly, and yes, it is not looking pretty at all.
Yeah, coming back to the stocks. I mean, stock action in the market. Trent. I mean, in a dire market like this, Trent really stood out. The stock was doing pretty well for itself after brokerage from Motilal Oswal Financial Services upgraded the stock Santo, and they've upgraded it to buy. And the argument seems to be that this company is now heading on a higher growth trajectory. So Motilal, basically their analysts went on ground. They had chats with a lot of people on website and other stores that Trent manages and runs. And it seems that a recovery in the business has been quite strong for them, not only in metro cities, but even in tier 2 towns, tier 3 towns. They have seen good amount of recovery in business, and the management is of course quite aggressive about expanding its network of stores. So things are looking up for Trent is according to Motilal.
The thing about recovery, often it has to be compared with what it was 2 years back. Most of the recovery what you're seeing is again the base is 2021 where things were anyway quite gloomy. So I wouldn't be too hopeful about a quick recovery. I'll wait for to see it.
Just an anecdotal point here. I bought this T-shirt from Zudio, one of the stores that are managed by Trent, and the crowd that I saw there, I think maybe Motilal Oswal is onto something here. So that
maybe you bumped into the analyst there and compared.
I did not. I assure you of that. Mangalore Refinery, the stock was booming on trade today. Okay, it was in double-digit gains today, largely because investors are counting on a bumper quarter of earnings. So a refinery business like Mangalore Refinery benefits on two counts. Okay, it has its refinery products, which have seen a significant increase in margins over the quarter because what is happening in the crude oil market due to Russia and Ukraine crisis. A lot of supply is getting hit, and that is increasing global margins for a lot of the products that are made out of crude oil, right? They are refined out of crude oil. So that is one part. Second part is that as a refinery, it also holds a lot of crude oil inventory, right? So when every quarter you will reprice your inventory according to what the market price is. So it may be a short-term gain, but a lot of inventory gain is going to happen because, of course, we have seen Brent crude oil prices rise almost 20-30% this quarter.
And the outlook generally is that crude prices will stay elevated. Occasionally you might see some kind of cooling off, but clearly the forecast for the year as a whole is, north of $100.
Absolutely. So these are the 2 points on which, the refinery business of Mangalore Refinery is going to do pretty well, and that is, reflecting on the stock price today.
Well, the Nifty has fallen below the psychological 17,000 mark. It's gone down to 16,944 odd. So that I think could in turn,
fifth day of straight losses.
Yes, panic more bulls into unwinding that
this
position.
is literally a panic move. I mean, you do not see such an intense sell-off. It's been less than 15 minutes?
Yes, sir.
Yeah?
Almost now 208 points.
Yeah, exactly. Anyway, coming back to stocks, Varroc Engineering also was doing pretty well for itself in trade today. There are, media reports coming out that it's going to sell its global lighting business. It's going to divest that, and according to reports, the valuation is being pegged in the corner of about around $650 million, if I'm not wrong. So $600 to $650 million is what the valuation is being guessed at. So it could be a good divestment opportunity. I mean, the company could get a lot of cash for it and maybe invest it into high growth opportunities that are out there. Next up is HDFC. We know what HDFC is doing to the market. So the stock is down 19% from the day of announcing its merger on April 4th. So just for reference, it rose more than 10%, 11% that day. So all of those gains have been wiped out, and it has fallen some more from there. Secondly, a major event has happened, a milestone has happened in market today. HDFC is no longer among the top 10 highest valued companies on Dalal Street, which is a big thing.
So, but also remember that, the demand for affordable housing is quite strong. I just happened to see a report by Varroc which said that, the supply of affordable housing has gone down by about 21%, which means that, some of the existing stock, unsold inventory, that has come down by 21% across 7 cities. And that is one of the major target audience for HDFC.
But it seems that the market is still not convinced. Market has big doubts over HDFC's growth, and even with what it can achieve with the merger with HDFC Bank. And of course, FPIs, they are the big sellers on HDFC counter, and they have continued to remain big sellers for the past few months. Lastly, Ineos Tyro. Okay, so this is a very strange, curious situation. I am sure you have a lot to say about this, because so the promoter has come out, it's a specialty chemical company, and the promoter has come out and said that, I'm offering about 13 to 14% of my stake to investors through an offer for sale process at a discount of 25% to yesterday's closing price.
That's huge. That's very generous on his part.
Yeah, very generous, I would say. On top of that, the promoter has also retained the option that in case demand, outweighs supply, he can offer, or the promoters can offer another 9% of equity, 9.4% of equity. So in total, about 24% equity in Ineos is on offer, is on the block through the offer for sale. As far as before coming here, if you check at what the OFS was doing, it was actually pretty good. Yeah. I mean, despite the discount being offered, I mean, it seems that investors were lapping up the stock, because the OFS as the non-retail portion was subscribed about 70% almost by 2:30 p.m.
The promoter himself being in a tearing hurry to bring his stake down is never good news, and that's why I always say, CJ, you need to be a little worry about
but you can't always look at the negative side of the intention. Maybe the promoter also wants to increase the overall liquidity also,
and he wants to spread wealth. Of course, I take
spread
that.
Wealth. Maybe
why just make all the money once?
Probably bring on a more quality investors onto the board. Because see, it's a specialty chemical company, and we all know that the outlook for specialty chemical stocks have been quite good for a long time. It's almost been 2 to 3 years that specialty chemical companies have been into.
You should send something when the promoter decides that this is a good time to get out at whatever price. Anyway, I think moving on to a next session.
I know you have something to tell us that I and both viewers have missed.
Yes. In the meantime, let's a quick recap of the market. Well,
1.5% down on the Nifty.
That's huge. That's a sudden dive.
It's a sudden dive, and I mean, it's being also led with rupee as well. Rupee has extended its weakness against the dollar. Is now weaker by about 0.22%. So yeah, looks like FPIs are the main driver. If rupee is weak the way it is, and the market has fallen so suddenly, it could possibly be the reason that foreign investors are selling.
Yes, probably, and we might still see a relief rally tomorrow.
Yeah, hope so.
So, in case you missed it, CJ.
What did I miss?
interest rates are steadily rising. You know?
Yeah.
And rising interest rates are never a good thing for equities. But what we have seen over the last few months or even a year or so is that most of the conventional correlations, they have been breaking down. So, you know, earlier you would think that if interest rates go up, equities should underperform, but that's not, you know, globally also you're seeing a slight divergence in trend, because even despite interest rate rising, many people think that, you know, stocks are the safe place to be in. That's one reason why
Of course, because there is no other alternative. There is no other alternative.
We'll get to know in a few months. Just be a little patient, you know. I know that your general theory is that we are still in a bull market and this is just a...
But what is your broader point? What is the broader point that
The broader point is that if up to a point interest rate rising is not bad news, but when it keeps rising and simultaneously stocks stop performing, that is when, you know, investors have a rethink. They then begin wondering, you know, should you really let your money be here, or instead, you know, why don't you put it there? And that is when money starts going out. And right now, retail money has been one of the main pillars of this market. So once they think that, you know, there is at least some decent returns to be made by parking money in bank deposits, then, you know, equity markets are in for more trouble.
I mean, but bank deposit right now are what, 3.5%, 4%. You're talking about what, 10-year CAGR of equities of about 9 to 10%. So I think a lot of the investors are now intelligent enough to understand that the trade-off is not that big. Yes, a lot of the old-time investors, retail investors, would be looking at, you know, the fixed deposit rate as a opportunity cost. Okay, do I make more return in equities than fixed deposits? If yes, then I'll go invest in equities. If no, then I'll keep my money in fixed deposits. But this wave of new investors, they have realized that equities is for the long term. They have diamond hands, Santo. They are not letting go.
You know, CJ, you made this point about, you know, what are interest rates? 3.5%, 4%. Yeah, 3.5%, 4% is low. But, you know, when you compare it with minus 6%, 10%, 15%, 20%, which is what happens when markets are in a downtrend, you know, plus 4% is really rich. And I think few months down the line, you'll realize that. I'll let you figure it out yourself.
My only counter to that point of yours, I do understand where you're coming from, but my only counter to that is that this set of retail investors have grown up reading Warren Buffett quotes on Twitter.
They yet to the most dangerous way to grow up.
The Lord Warren Buffett is looking over them. So they are definitely going to hold on. They are not going to have wobbly Maggie noodle feet, you know, the moment market falls 5-10%.
Well.
Anyway, I think that said, what are you going to look at tomorrow when we come back?
Exactly.
Especially after this sort of a carnage that we are seeing on the street.
So I'll be closely looking at the numbers from ICICI Securities and also Angel One.
And why is that?
For the simple reason, you know, Angel One gave its fourth quarter update, and there are signs that retail investor enthusiasm is waning a little bit. They are beginning to get a little cautious. Now, you may possibly counter it by saying that, no, that's just one portion of the market. You made that point this morning saying that, you know, the new age broker fintech companies are kind of taking away market share from them.
They are.
But at the same time, you can't ignore, you know, the traditional players altogether. So I would be looking very closely at the numbers, you know, in terms of...
I think Angel One's numbers will be more telling of retail investor behavior than ICICI Securities, is the broader point that I would want to put across.
So then let's see tomorrow.
Let's see tomorrow. Apart from the brokerage industry earnings that Santo here talked about and is going to look out for, ACC's earnings, they will probably be coming out in a short while, and those earnings will be pretty crucial for the cement sector at large. Cement sector and the entire space has been doing quite well. Over the past, if you look at the past 10-15 days performance, they have been outperforming the market overall. And with price hikes happening, some people having concerns about demand in the sector, I think the earnings of ACC will shed a lot of light on how the rest of the pack in the cement space is going to perform in Q4. So that is something to really watch out for.
And if there is a pop, then probably CJ, you must take some money off the table for now.
I am not invested in ACC, but I'm sure people who want to do it, they will do it with due diligence and the right financial advice. That said,
well, with that, it's a wrap of this episode of Markets with Santo and CJ. Thanks so much for watching, and for more updates on the market, please stay logged on to moneycontrol.com and also the Money Control app.
Yeah, and please post your feedback on the comment section below, and do follow us on the links on the bottom of your screen. Stay healthy, stay safe, and keep investing. Take care. We'll see you tomorrow morning at 9 a.m. Thank you.
See you.